10% market pullbacks. This is a really good piece today. Really good. It's an early market measure today. We put it together, and we thought we'd hit you with some good stuff. This, and then some trading, and then some.
Julia's got a special at 9 o'clock. Odd enough, I don't even think you know about it. Going to be great.
Yeah, well, all her stuff's great. So, 10% market pullbacks and their implied volatilities. So the S&P has had a significant pullback from the market top in the past month. It's experienced about a 10% drop from top to bottom based on closing prices, and a 10.5% drop based on intraday prices. Okay, nothing. We're all clear of the concept.
Sure.
Doesn't feel like it's been that much because vol hasn't really gone anywhere, but still.
Yep.
I mean, it's going up, but not like crazy.
Yep.
Let's go next slide. So how often have we seen a 10% drop in the broad market? And what happened to its implied volatility? We analyzed SPX data for the past 2 decades. For the last 20 years, we eliminated all the overlaps in the same testing period. So, for example, if we saw a 10% market drop between 218 and 312, and between 219 and 313, we only recorded the occurrences as one drop in that same window. All right?
Mm-hmm.
You want to see how many times does this happen?
All right,
sounds
slide. Good.
In the past 20 years, there have only been 16 occurrences. So just under, well, that's still a reasonable amount.
Sure.
There have been 16 occurrences in 20 years that saw a continuous downside of over 10% within a month. The current market drop, and that's what keeps everybody honest, the current market drop is still slightly smaller than the other moves on average, but the average daily moves are almost the same. So since 2005, there's been 16 occurrences. This one, the average return here is down. The average return since 2005 is down 14. We're down 10 right now. That's before today, so today makes it 11. The duration on average is 23 or 24 days. We're at 22, so we're right there. Mm-hmm. And the average daily return, like this note said, down just under 0.5% per day. So does this mean clear selling in 2 more days?
Maybe.
Let's go to the next slide.
Whoever's listening, maybe.
Even though in 2020 we saw the quickest and largest move in a short window, 2008 and 2022 had more large downside moves because the duration of the market sell-offs lasted longer. All right, we're aware of that. Let's go next slide. But what about the implied volatility change in the VIX? Since the total magnitude and average daily move of the current pullback are close to historical average, do we expect to see the VIX the same? And this may be where things are not exactly the same. Let's go to the next slide. So the VIX only rose 10 points during the current market decline, compared to an historical median of 16 points. The VIX stayed below 28, the lowest peak ever during a 10% SPX drop. Did you know that?
No.
Either did I.
How would I know that?
I don't know, but I didn't know either.
Right.
It sounds like a Vecchio quote.
It does, and I think we stole his thunder.
I think we might have stolen his thunder there. But this is very interesting because that is the kind of thing that Chris would come up with in a heartbeat. The VIX peak stayed below 28, which is the lowest peak ever during a 10% SPX drop. And I'll argue that 28 wasn't even a good 28. I would argue that too. Really, the VIX has stayed below 25.
Yep.
So this sell-off lacks the sharp volatility spike and capitulation seen in previous declines. Now, does that mean, is that a good sign or a bad sign in your opinion?
I mean, probably a good sign for everybody out there. I mean, a good outcome for everybody out there. I don't know if it's a good sign or not.
Yeah, I know. I'm torn on this one.
I am.
I don't know if it means the worst is yet to come. But
yeah, I know. I mean, when you least expect it kind of thing.
Right.
You know what? You could have said that for the last 10.
I know. So I guess I have to agree with you that it's probably a good sign for the market, but it does make me think that the worst is yet to come. This is consistent with the option premium levels. Compared to the most recent large pullbacks, the premium for a 16 Delta Strangle on March 13th, 2025, is much lower than that of other occurrences as a percentage of underlying move. So when we look at 2018, 20, March of 20, April of 22, September of 22, and March of 25, based on where we're trading, the one standard deviation premium as a percentage of stock price is the lowest. So those who are short premium, it wasn't as bad. That's all it's saying.
Yeah, yeah.
Here's a better way to say it. This was the best down move ever if you're short premium because it did the least amount of damage. And
yep.
I can attest to that because
even you are making money. That's right.
That's right. Even me.
That's right. If you can do it, we all can do it. Because we make money when it's hard. I mean, when it's easy.
It took SPX 22 calendar days to drop exactly 10% in the current sell-off, pushing the VIX to a max of 28 at its highest point. There have only been 16 occurrences that were greater than 10% pullbacks in any 30 calendar days in the past 2 decades. So the magnitude of this downside move is rare. The current correction has the same daily percentage move as the long-term average, close to about 0.5% a day. However, the peak VIX level as well as the VIX range during this sell-off are significantly lower than in other events.